Despite a slight rise, oil continues to trade at around $80 per barrel in anticipation of the European Central Bank's policy meeting. The European regulator is widely expected to announce a shift towards a gradual easing of the financial conditions, and in this case the US dollar will gain ground due to its inverse correlation with almost all financial assets, thus pushing oil prices back below $80 per barrel. At the same time, oil price quotes might hold steady near one-month highs, supported by the news about a drawdown in the US crude oil stocks. The latest EIA data showed that crude oil inventories in the United States plunged by 9,233,000 barrels last week. In addition, fresh stimulus in China, in the world's largest oil importer, adds to the bullish mood in the oil market. The People's Bank of China announced that next month it would cut the reserve equipment ratio for banks in an attempt to boost the country's faltering economy. Brent crude oil futures are once again testing the level of $80 per barrel. From a technical point of view, this indicates an increase in the volume of long positions. If the price consolidates above this mark, the benchmark will have a chance of extending gains. However, fundamental analysis is now a top priority when making trading decisions. That's why it's worth being guided by the news rather than technical signals. Meanwhile, geopolitical tensions are increasing. A coalition led by the US and Britain is ramping up strikes against Houthi targets in Yemen in response to multiple attacks on a commercial shipping in the Red Sea. Oil tankers are forced to change their routes to bypass the Red Sea, which leads to higher transportation costs and higher prices. Given that the main commodity is energy, the global economy once again risks facing a new spike in inflation. Against this background, it makes no sense for central banks to rush into interest rate cuts. Ahead of the European Central Bank's policy meeting, gold has already dipped to $2,000 per troy ounce and is likely to extend weakness. Briefly falling below this level, interest rate cuts by key central banks make safe haven assets, including gold, more attractive for investors. Thus, after a slight decline, the yellow metal is expected to resume gains on capital flows from the debt market. Moreover, gold has every chance of hitting a new all-time high. Speaking of the Russian currency, it's still trading in the range of 88 to 89 rubles per dollar. However, despite the ruble's seeming indifference to global market trends, today's European Central Bank policy meeting may affect the Russian currency. Most likely, the dollar will gain strong upside momentum, thus weighing on the ruble. The dollar-ruble pair may well rise above 89 rubles and then try to stay firm there. Whether it will succeed or not is another thing. Much will depend on internal factors, particularly the Ministry of Finance and the Bank of Russia's financial decision on the extension of measures on the mandatory sale of foreign currency earnings. And that's all for now. We continue to follow developments in the financial markets. Subscribe to our channel and follow the news with us, and see you soon!